Welcome to TradeTheMBI.com. This is John's report is for the final day of the year, the 31st of December. We are in the continuation of our buy signal, which happened, at the crossover and the dip of the orange, right at the key algo here at 2371-ish. Once we pop back above again, the resistance points came at the 23%. Above, you can be long, below, short. Less short because in this particular case, with this kind of a buy signal, it's still pretty strong, even with the cyan minus 782. But what are we going to be looking for as your earliest cursor? Now that green is over cyan, it negates the orange moving above. So your next likely outlook will be a dip of the steel below the 7.5. Last time it happened was right over here, just before the end of the peak. At that particular point, orange crossed above, but you still had green rising, and then it formed a DOC spread, which kind of clarified everything, and then we headed into a major tailspin of short continuation until we just had this brief turnaround, and that's usually what happens off of an exacerbated low. Boom, pop, but already getting overbought. We don't expect a whole lot from this. It's going to dip below the red line, which goes all the way to here. We made the new lows the next day. Typically satisfies it from that standpoint, but coming off this kind of a deep swoon, usually it's there's a little pause back, so I'd be looking for the 23% unless you just catch fire and explode. But at this particular point, we don't have a pullback signal of any kind other than just orange is rising, so that tends to put a little pressure. So it's the equivalent of the closing of the bullish mouth. But buyers and everything are doing the right thing, and then getting bred into a new zone always provides a little bit of an impetus, and so you often get nice up bar days on those. So this is about reallocation, though, of year-end, and everyone's settling their accounts to get their bonuses, blah, 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 blah. We can see from the NQ, almost identical, a little bit softer, actually, with the steel. Stronger in the green area, so subtle variation, but still well within the broader parameters. And it's not uncommon, though, like I said, that when you have runs like these, that 38%, in fact, we should identify what that 38% level is. I think it's 12. Yeah, 25, 12 and a quarter. Keep that one in mind, because that will, again, be key resistance going back and forth. And then we'll look at some of the other ones on the intraday chart. So for the NASDAQ, pretty much looking identical. The euro has been, in a stronger mode. Obviously, Italy's budget got approved the other day, so ooh la la, super excitement. Who really wants to be investing in EU at this particular time? I don't know, but that's okay. From a treasury standpoint, just crazy elevation still here. People, some are confused. Some are wanting to allocate back into securities with the dip. Others still afraid. So it tends to disproportionately favor being in safe. And it's one of those philosophies I disagree with, because I think if you have the right models and that you really want to attack volatility because it becomes an enormous friend like it has for us during these last few months, recognizing it was coming and then being able to identify the direction that it was headed. Oil is in this continued down. I mean, this is like a zero inflation kind of scenario. So it's sort of odd when you're thinking about just raising rates to raise rates, because normally it was intended to, prevent exacerbations in inflation, that kind of thing. But if you're having significant growth with no inflation, raising rates just to stop growth, it just seems some kind of new version of control that you don't even want to think about, because it just doesn't make practical sense. There used to be a time where you could let the economy just grow as it does. Gold's recognizing the squeeze here. They're still fearful of the economic conditions globally, and I think that's starting to present itself. It's also suggesting that there's added risk going into this time period. We just had the test of that hypersonic missile by Russia, things like that. So perhaps from a global standpoint, there might be the perception The tensions are, in fact, climbing. I guess it would be helpful if we were at the current day, which is where we're at right here. And we can go a little bit backwards on this. So already super positive extremes coming out throughout this liftoff right here, but serious with that steel under cyan. And the only time you get interesting is when you get the crossovers. The steel has to rise above, so as long as the steel stays below, and this is a good one to remember, you're in a continuation long pattern. So it has to rise above cyan in that particular case. If we were looking at this, yes, you have steel crossing below and you have orange crossing above green. Problem you've got is you don't have green crossing below red. Not that you couldn't take this, because I take plenty of these. You just have to recognize that you're probably not going to get a significant move, particularly when you're riding super high on the shakeout. So it did dip a little bit, but came right back up to it. Beautiful though is the 2505.50. Been loving taking advantage of that one. We ended up end of day here as we got the pop going through, and we ended up with that exact same signal I was just describing right there. And like I was going to say, it's just a little premature. Now in this one, you'd be kind of like, wow, I've got lower shakeout. You don't quite have your peak that spot, but you have to expect follow through. And the problem you get with that is if steel dips below your negative 13 in that, you got to expect a turnaround move there, because as soon as it comes back up, that's the closing of a short mouth boom, and that's exactly what it produced. But at the same time, it produced the signal again. Look at the difference. Green is below red. Still have red rising, but you're at the peak, and this particular point, you still ended up with a few bars until we get with a full DOC spread where it finally breaks down, but it does give you the opportunity to be in. And of course, stop at a high. Here we have the close at 16 3/4. The high is up at 20, so you're within a 4-point stop, which is very comfortable. And it's just a matter of waiting for it to do its thing. I would start to get a little concerned at the steel crossover right there, particularly with the dip of green going underneath. It would not be uncommon for me to take a gain at that particular spot, just in the anticipation of continuation. And sure enough, it does continue. You get the pop, the crossover. Effectively a buy signal that gets rejected literally by the next bar. So at that particular point, you have the 50% that you can enter back into to trade it short, and boom, it just cascades lower in a continuation form. And especially when you don't get that orange below red, it doesn't happen until all the way over here at the P2 level, and it still took a little while to work. And this is the thing about longs, where shorts, a lot of times you get that nice follow through really fast. Sometimes the longs take forever, and you just have to have a stop that's just going to stay there and that. But there was just a myriad of action throughout the entire day. A lot of them were just short up moves, short down moves. We had some really strong breakdowns when they did occur. They were very effective to trade, and I like to put this up because you can go through and see the way I'm looking at when I'm following the trade markers, and you can see the alterations that take place. You know, there are plenty of times where, depending on the mode I'm in, if I'm just looking for quick trades, then fine, I take this little dip, and when I get my orange plummet or a green cross, I go, okay, I'll cover that. But oftentimes I'll be building a position if I'm going to be taking larger, and here's one of those similar situations where you get the orange rise set up with the cyan and everything, and then it just makes a brief little move, and that's because you're caught right at the zero level where it becomes critical, and you've got to stay with it. So even if you wanted to trade out of a trade like that one, you have to take the second one, because that's the one that's likely to produce something, in which case it did. And then we ended up with a lot of short signals with what I would call weak long configurations, particularly on the initial dive. I'm not expecting those to do a whole lot. This actually performed a little better than might have expected, but with the dip below the red line right there, I'm expecting these lows to be revisited, which they end up being revisited, and then it's proceeded to get more bullish. We ended up with lot of signals that were right at the key levels. This one in the previous 2476 range. Again, we had the 2505 as a upside resistance point, which was worth noting because they become attracting. When you're in gold, and I'm looking at moving to the highs. Even with this configuration, I was still, I would think they would want to get closer to that 2505 to get a lot more. So I wasn't surprised when this ebbed back up, but as it got closer to the 2505, it's like, okay, now I know more shorts are going to get activated within this setup, and that's what I'm looking for. I'm looking to see cyan move over that zero level and stay there, because it's sort of a consistency mark that shorts are really attacking this, as opposed to just you don't have enough buyers. In this particular case, it didn't really present itself as very strong from a short standpoint because they were pretty weak, and so that just suggested that, hey, you just don't have enough buyers ready to push through this, and so that cave tends to be a little bit softer, and that's how you can kind of read the difference between some of these moves like this. When you get the cyan below red, you've got a lot of buying interest that just propels us, and that's exactly what it did. And it was like boom. And again, you might be attracted to that setup, but with this angle of red rising in such dramatic fashion, you know that you're likely to support off any of these key support elements. Now, once it dipped below zero, that became much more interesting to me, because it's like, they shouldn't have had to fade that low. This is where these became much more attractive, and you had beautiful setups all the way going back for all these positive extremes. So your profit target certainly was looking far more attractive from this 38% zone, which is no coincidence that we would end up with the steel cross right at that particular spot. And then the secondary run was literally just about that collapse of interest. And again, look at much higher cyan. When you get that kind of buildup, it's like, okay, and you have just the opposite from longs, and they're continuing to stay weak and fading. So, tale of two situations, and I think very exciting. So the new year going to be good. I've been working strong with the 50K system that I've been setting up. Let's do some back testing for there. Set up to the current mode. Interesting that within this setup I had not programmed in it the cyan under red as a long configuration, so that's going to get added back into it because again, it's always a long, and it doesn't matter if you're on 5K, 50K, it works the same way. So I will continue to put up info on the Skype chat, sending out indicators today, so you'll have them all set for Wednesday, even though we have day off for New Year's. So happy New Year to everyone, and as always, trade well, and we'll talk again later.